Welcome back to lecture 9. I'm not really going to go over notes. I don't really kind of want to go over notes because like these are my notes. Like you're not going to get anything out of my notes. Like you're not going to get anything about someone else's notes, and that is for sure, and we both know that. So I want to go just kind of into the charts and just kind of just this is a market review, I guess. And also going over the things discussed in the mentorship video today. So yeah, so all these yellow, like these might be annoying to you, but these are new day opening gaps right here. We have new day opening gap right here. I want to zoom out to that 5 minute, and I want to actually use this indicator. So today was, oh shoot, bro, hold up, give me 1 second. So today was actually I'm gonna leave this on. We're on this day here. So today was definitely it was definitely a nice day in my opinion. So here we have this green box right here is a previous new week opening gap. So I like to use all type of new week opening gaps, and this is just an instance. New week opening gap is respected here. We have a rejection block, repricing higher here above a new week opening gap right here. And this is interesting. We manipulate before 9:30, so we come back down. We create a big wick into this imbalance right here, right at 825 here, taking these lows here as well. So, excuse me, sorry. So 8:30 can have this big manipulation here. Look at where we deliver right to. New week opening gap. Then we have expansion above that. Breakaway gap right here. Then we have another breakaway gap here. Displacement. And this was kind of just repricing higher, repricing higher, repricing higher. This looks pretty much like Tuesday in a sense. I believe it was Tuesday. And then here we have, actually, we're not going to look at any of this price action. This has already happened. So here, then we have a PM session that yeah, like this PM session was pretty ugly. This was just pure time distortion. And then 3:30, we come up, stop on right here, come back down. Wait, is this a lower time frame inefficiency here that we draw into? Not really. Maybe ES drew into a significant level. Nothing crazy there. Then come back up. Then we just hang around that new day opening out there. So ICT was looking for lower prices, which I understand because we're in a deep premium. I'm not gonna act like I know better, but we never saw like a clear displacement leg lower. We never saw a clear manipulation. We're always supporting down close candles. We have this big down close candle that's great, gets created around 9:30. We have a setup right here to buy side. Then we come back down, respecting this new day opening gap right here. We have a breaker right here that we respect right there. Breaker, we come back down, also into this order block right there. Then displacement higher. We have a 1, 2, 3 drive, but that's not significant because order flow we tell we have a stop on right here. Displacement higher right here. Then we have 950 macro. So right here is we just weren't at a higher time frame PD array, and like regardless of if this was going to be a short, this is just a leg to generate liquidity to entice sellers into the market right here. Where are we repricing right to? This order block right there, all happening within 950 macro. So we have right there 950 macro. Then we come back up, displacement higher, silver bullet right there, then silver bullet right there. So boom, right there. We'll go into that into lower time frames per usual. New week opening gap acts as a new day opening gap, not new week. If I ever mess that up, it's usually yellow and white are new day opening gaps, and then green and blue are new week opening gaps whenever you see my charts. So I'll definitely mess that up. But here we have new day opening gap becomes a draw. We come back lower, still no displacement lower, and more importantly, no manipulation, no manipulation at the highs at all. So therefore, what are we more likely to see? Continuing order flow. And right here, we have order block right there. Boom. Oh, beautiful. Right there. The opening price is sensitive. We also have this fair value gap right there. A lower time frame thing that we'll go over. Then we have, what do we have? Another order block right there. Beautiful. Then we come back up. We generate highs right above this new day opening gap right there. And then what do? We continue to press higher. And then this right here, we're in very much of a deep premium at this point. We're in a very deep premium. Like your best shorts aren't really going to manifest here. And if we like look at this day, like sure, yeah, price went higher and we had just clean runs, or not clean runs, we just kind of just marked higher. Like ICT says, there isn't like a instant gratification setup, which is what ICT likes to look for. But in my opinion, like like it does. In my opinion, it doesn't matter how long it really takes, as long as you know the direction of the draw liquidity. And here we just continue to press higher in a deep premium. You're not going to find your best shorts are going to happen here. And yeah, let's just drop down into a lower time frame. I kind of want to do a little 15-second time frame first, and then we'll drop down to 5 seconds. These are not time frames that I'm going to look to enter off of. Like this is just personally for algorithmic signature, just to look at these algorithmic signatures on the lower time frame after they've happened here. So what do we have here? 9:30 we open. Or I feel like I haven't been going over the 7 a.m. 8 a.m. I didn't go over that in the previous. So let's start right there. So 7 a.m. what do? We start a buy model here. And then what do we have here? We have a dealing range. What do we do here? We come back down, we manipulate into what? Discount. So discount prices are offered. We come back down to a new day opening gap. That's this yellow level right here. After we've taken a large pool of liquidity here, below true day open, not below either, but below true day with equal highs generated here. And then what do we have? We have manipulation. What is more likely to happen? Distribution. What do we have here? Distribution, come back down into a volume bounce here that gets respected. Then we have displacement higher. I just want to see this leg here. This is kind of just. Can you imagine if that was the exact high? That'd be crazy. Pretty close to that high. -4 right there. We have consolidation, expansion there. Nice little bull flag. Nice bull flag right there. And what do we have here? What are we doing? We're marking between these new day opening gaps. So we come back down to this new day opening gap, new day opening gap, new day opening gap. Like, yeah, these levels are just getting ping pong through. Overall, we do have equal lows here. We have taken sell side here. Overall, like these lows still get repriced too. We have taken this liquidity pool here, so we don't refer to these. And then we have an opening range gap. Let me put this indicator on. We have an opening range gap here. We come down, we slightly fill it here, and then we just end up repricing higher. 9:30, where's that at? 9:30, what do? We create a dealing range here, buy side taken, and then sell side taken here. Dealing range is established, then we come back lower into this inefficiency right here, into this 1 minute imbalance right there. We have a 15-second right there, volume imbalance right there. Boom, up to buy side again. Then what do? Take buy side, market structure shift, fair value gap, 2022 model fails. Or technically it doesn't, technically it wasn't there because there wouldn't be the entry criteria because we need a retracement into premium here. So technically you don't get that. So, but we do end up repricing this low, stop it right here. Look at the wick right there. We had a lecture on wicks yesterday. Constant approach of that very well gets respected. Opening range gap, this is 9:30 opening price right there. Boom, tapped right there. Then we see displacement, retracement right there, into this imbalance right there, into that new day opening gap. Come back here, we have a mitigation with a fair value gap. Boom, this is the 950 macro. 950 macro, we come back lower. This is the order block that gets respected. Here, this is not a good short. This is not a good shorting opportunity in my opinion. This is just there's no substance to this leg here. We're not respecting an order block here. As we see, yeah, we have here. This just seems like a false run in my opinion. It's just a leg lower. Then come back here, go into that in lower time frame. I think it's a 5-second or fair value gap. Little spoiler. Then we have a 15-second inefficiency here. We come back up. Here's that silver bullet. What are we repricing to? We'll get into that in a minute. Silver bullets. This was a higher 2 new day opening gap right there. So notice what are we doing? We're still respecting bullish order flow. So what is likely going to happen? We're likely going to head up to that new day opening gap. You don't really need too much liquidity on the left side of the chart. all you need is like what we're doing and new day opening gaps, in my opinion. We come back lower, sell side taken, displacement right here, fair value gap, boom, in that 1050 macro. Beautiful delivery. What do we have here? Manipulation, and I've at 1050, and then boom, up to buy side. We come back lower. It's just beautiful. It's beautiful in that into that down close candle. This also is I put this on my chart, but this is in event horizon, which in my opinion this is kind of just me cherry picking, which is what I usually do, honestly. Like this is the event horizon PD array, which is distance, equal distance between new day opening gaps right there. Then we come back up. You see buy side here, equal highs. Boom, come back lower. 15-second imbalance right there during 1150 macro. What do we have here? Generated highs here. What do we have here? Again, a macro again. Manipulation, distribution, kind of here. Accumulation, manipulation, distribution. Right there, come back up. Generate highs right above the new day opening gap. Come back lower. Stop out more traders. And then we end up displacing higher. Time distortion, time distortion. I don't really want to go over that. Then what do we have here? Stop on here. Boom. And yeah, let's hop into the 5-second time frame and then let's wrap this up. So oh yeah, also we have this SMT with ES here. What's more likely after seeing all this with the SMT? We're likely going to see higher prices here. There's not really much else here. Fair value gap right there. Sell side. You have the order block. You have all these consecutive down close candles. That gets respected there. Here's that macro. Here's that inefficiency right there on the 5-second. Then we come back down. Order block right there. Sell side taken. Shift to market structure. Imbalance. 2022 model here. Perfectly. Right there. Then we have an imbalance right there. What are we repricing to? Ooh. These levels make a little bit more sense on a lower time frame. Like 5-second chart. Like honestly, like I feel like yeah, it is excessive, but like if you look at these volume imbalances on a lower time frame, that's where we're repricing to, and like that can give you a little bit of an edge. It also can, quote unquote, overcomplicate things. Sell side taken, shift to market structure, fair value gap right there. This is a 2022 model. Yes, you have some heat. Where would your stop be? Where could a stop be? It could be at this rejection block right there. Come back higher, reprice higher. Fair value gap. Silver bullets, silver bullets. Just look at the volume imbalances right there. Volume imbalance right here. This is a liquidity void right there. Fair value gap. Come back up. New day opening gap right there is taken. What do we have here? Buy side taken. Shift to market structure. Fair value gap right there. After leaving a breakaway. Come back lower to these two, or we actually don't come to those equal lows. Pause. We come back up. Volume balance right there. Displacement right there. Imbalance right there. Aligned with this mitigation. Boom. Sell side taken. Barely purged. So we might have more sell side interest there. Do you ever take that low? I don't think we do. Okay, so we come back up. Inefficiency right there. Reprice 2. Along with this big order block right there. Boom. Buy side. Delivery there. Here's this outline. Then we come back down. Where? Volume balance right there. Perfect. Beautiful. Come back up higher. And that new day opening gap. Volume balance. Volume imbalance. Like, these volume imbalances on the 5-second, like, what is that? That's like 15 examples just in this day here, and I'm probably not showing all of them either. Like, look at that volume balance gets repriced to volume balance, and then we leave equal highs here, come back lower by set taken, shift to market structure for value gap. Look at that constant encroachment. Boom, nice. Was this is liquidity void? So no trading at all. That is a real liquidity void. Come back lower, volume balance right there, like. Volume imbalance, come back lower, volume imbalance. Like these volume imbalances on the 5-second, like I've been ever since I watched an ICT lecture and ICT said volume imbalances are like a glitch in the matrix, I've been paying more attention to them. And man, oh boy, they are a glitch in the matrix. That is for sure. Then we come back lower to where? I wonder what volume imbalance right there. They come back lower. We actually don't trade to a volume imbalance. Again, cherry picking. I'm cherry picking right here. Volume imbalance right there. Let me come back up, and this is all just time distortion that I don't really want to go. Or sorry, it starts here. So the past few days, we've been having really rigid. I don't. What is it? We've been having pretty crazy like lunch hours. We haven't had anything to do in lunch hour. My theory is, if I'm a betting man, it's not gonna happen 5 days in a row. I'm playing that's just, I feel like the lunch macros. I'm not gonna talk like that. That's gambling. That's sorry. I'm not gonna talk like that. Just act like I never talked. So this is what I talked about in yesterday's video, which I just recorded before this. But here we have 350 macro. Look at what time. At what time did we get a large candle? 350. I'm gonna continue to backtest this because I've honestly just noticed this like starting today when I've got this 5-second chart, and I've had this 5-second chart now. But 350 macro. Beautiful. What is this? This in itself is like gorgeous. Sorry, I'm fumbling for the. I was trying to stall there. What do we have? Sell side of the curve, buy side of the curve, right to equal highs, right to inefficiency, right to new day opening gap. The only thing I don't like about this macro here is these lows here. So I wouldn't really look to trade this, to be honest. But the theory's there. What also is there? What's here? Volume balance. Or sorry, fair value. Why did I say volume? Fair value gap. Okay. So I kind of want to look at where charts are at right now, and I kind of want to just give my bias. I want to give a bias here. I'm not trying to predict. I'm just going to give like a loose bias, and obviously I've been going along with the mentorship. I'm not trying to predict anything. I'm just trying to look at price. So obviously, what are we within? We're just continuing to make new highs here. So we are in a premium. It is a Friday. We have been one-sided all week. I do not like to even look at the TGIF pro. Like for me, the TGIF just does not resonate to me at all whatsoever. Like in my personal opinion, like yeah, I know it's an expectation to see on the weekly range, but more often than not, which is just my opinion, I don't think TGIF is like something that I'm ever really gonna look for, because it often just leads to false expectations. Oh, it's a Friday, so we're gonna retrace into a range. Like yeah, it's a possibility, but what's king over that? Liquidity over then a range. So obviously, what am I looking at? I'm looking at these highs here, and I'm looking at this liquidity void right there. I've been eyeing that for some time now, which should be a new day opening gap. Should be. Yeah, it is a new day opening gap right there. You can kind of see it. So that is kind of my overall objective here. Although we are in a premium here, we're in a deep premium. What could happen? We could see some form of retracement here. Where would that be? Into probably this gap here. But it's hard to really have a bias doing this. We've just been one-sided here, with like no true like retracements and stuff. If I had this top on here, I think we're probably gonna see these highs. But obviously, I want to see how we're trading. If we're looking at what we're doing at like right now, currently we're trading above this true day open. So I want to see if we come into this area here, and if we start to reject that. I'm looking at this level right here. We have cluster of new day opening gaps here, but if we continue, I'm looking to these new day opening gaps. Like look at all these new day opening gaps we have there. So yeah, that's kind of what I'm looking for. But yeah, anyways, I'll see you on the next one. That's all I got for this one, and have a good one.